Hello traders, welcome back. Another video today guys, and I will be showing you two trades that I was able to catch during the London session. And the first one is here on a Euro USD, but before looking at the 5 minute, I want to show you guys the higher time frame, because I don't usually use the daily time frame, but in this case I really had to, because you can see the price has been downtrending for a whole month now. So this is the 3rd of September, and since then the price has printed this very strong bearish candles, and we only have 3 bullish candles. And the only thing that was keeping this price above structure was this low right here. Once we were able to break that low, we have nothing here looking at the left. So it's pretty difficult to find some price action, some structure that can give us some insights of where the market can go. The only thing that I can see is on the daily, and it's this level of support. So I also saw that yesterday with this bearish candle, we also broke this level of support. So my bias hasn't changed. I still want to sell on Euro USD. So this is going to be the bias for the day. And what I have to do is just slow the time frame and see any type of pullback and supply areas and where the price can continue, and I can take other sell positions. So let's go now to the 5 minutes and see how the price was moving during the Asian session and the previous day. Let me show you the sessions. Okay, so this was the previous day, and during the Asian session we've seen the price going up with a very weird price action. So I don't like this type of movements. This is not an uptrend, this is just a pause in the market going a little bit up, so nothing really useful in order to analyze the market. So this is nothing. This is probably going to be manipulated the day after, and you can see clearly here that we break that sort of uptrend. And during the morning, before London session, we start printing some bearish structure already. Okay, but I'll wait for the London Open in order to take some trades. And you can see that during the London Open the price started going higher and higher and higher, and we still have this equal highs of the Asian session that we haven't taken the liquidity above. So I was really expecting the price to go a little bit higher than that level in order to take a trade. And you can see that if I go on a 1 minute, the price section is very clear. So we have equal highs right here and Asian high, and we can see that the price, when it goes there on London Open, so we have here the London Open, you can see once it starts going up during London Open and towards the resistance right there, you can see the price slowing down, showing you some sign of weakness here, like a double top, man engulfing, and directional candles, making you think like the price is going to go down from here. So this is a clear inducement to make people sell. What do we have after this sort of confirmation? We have the price going higher. So you can see we print this low, higher low, and this higher high. And what happens just after this break of structure to the upside? Usually the price should continue higher if this is an uptrend, correct? But what we see instead, if the price going lower, finding some resistance again around this area, and then from this high we are also able to break structure. So now we also have the break of this very strong support. You can see how many times the price bounces around this area, and we are now finally able to break from this high. So this also is our main order block or supply zone, because only from here the price was able to break below, and I was just expecting a pullback into that area, and this was my main supply zone. And once I saw the price go back into that area, so this was basically the whole supply area that I had. Once I saw the price go back into that supply area, I just sold the price and covered the previous high like this. Pretty simple, going with this demand zone as a target for a 5.5 risk reward. Unfortunately the price went in my direction even after I closed it, so it would have been even better. But yeah, of course it's not nice to see the price go like this, but you never know if it's going to continue or if it's going to bounce. Maybe in this case, looking at the momentum, the very strong bearish structure, I should have kept the position a little bit more, put the stop loss at break even, and just let it run. But I have my own rules in my trading plan, as long as I'm above 4 or 5 risk reward, I never regret closing positions and taking profits. So profit, guys, is profit. I bet that everyone after closing this type of trade is happy at the end of the day. Yes, it could have been more, but it could have also been 0. So I'm okay with my profits. You should really be doing the same thing over time. This is the most important thing. So if you're used to let your trades run, you should do that always. Or if you're okay with your position and you always try to close them 100% of the volume, just keep doing the same thing. This is the only advice that I can give you. The next trade, guys, was gold. even this one was pretty simple. So let's go on a higher time frame, like 30 minutes, and this is pretty clear that the price action basically is downtrend. So we keep printing this type of movement in which we have highs, lower lows, lower highs, lower lows, lower highs. We have a head and shoulders here, a little bit of correction, then we break that as well, another push lower, another correction here, and then we also have another push lower. So my main bias is still selling gold, and that was basically why I took a sell position. I saw this area of resistance, and I just wanted to see how the price was moving around the area. I lowered the time frame, and you can see that on the 5 minutes I was able to catch a sell position right here on this supply zone. So we took some liquidity above this high, we went deeper into the supply area, and that's pretty much the reason why I took a trade right here with a take profit on the previous low for a 1 to 4 risk reward. I could have gone a little bit more, honestly, with this previous low right here with the 1 to 6 risk reward, but as I said before, I have my own rules and I was happy with it. So more or less 1 to 10 risk reward up during the day, just in London session. And that's it, guys. I really hope this was useful. Take some notes from this. It's not financial advice, of course. This is just how I work. I'm just trying to give you some tips and things that you might include in your trading plan, guys. And let me know in the comments if you find this useful, if you have any question. And I also advise you guys to follow me on Instagram as well. And like this video, subscribe. I would really appreciate it. And see you in the next one.